2017 was really a wild year for markets to the upside. Globalized, synchronized growth. It slowly started to give way as we entered the third section of 2018, right after the big January rally. Next we know it's diverging. Then we get a whole lot of market volatility, and straight now we go to must be a recession that has to follow. Do you agree with that logic, Brett? If you do, tell me why, and if you don't, tell me why.
Well, I don't, because I think a slowdown is being conflated with a recession. The two are very distinct things. I think we and most of the economic forecasting community have anticipated a slowdown for the U.S. going from 2018 to 2019 because, like most economic forecasters, we anticipated that the bump from the tax cuts and extra spending from Washington would provide only a transitory improvement in growth. And you're seeing that come off now as we get toward the end of 2018 and head into 2019. I think the real concern now is that that slowdown from what we're projecting at 2.9% growth for the U.S. in 2018 to 2.4% in 2019 could be enhanced further by the uncertainty on policy coming out of Washington. Markets do a really good job of pricing risk, and they do a much tougher job of trying to price uncertainty. And we're in very uncertain times on the policy front. When you have a lot of volatility on foreign policy, you've got an unnecessary trade war being launched, and you have unprecedented criticism of the Fed chair.
You know what, and it's very hard to disagree with that. I know that on the trade war there's a variety of opinions, and it sounds like that you're not of the positive opinion there. I continue to think that as these policies start to clear up, does that not offer another avenue where some of the downgraded growth due to what you say were one-time bumps in policy at the end of 17, early 18, you don't see an aisle for that to ramp up a bit so it's all downhill from here?
Yeah, I do. I think, in many ways, the impact of the trade war is being overpriced right now. We see the impact of the tariffs launched by the White House to this point only shaving growth in the U.S. by a couple tenths of a percentage point at most. And going forward, we don't actually anticipate the intensification of tariffs with China going through. If you look at the first tranche of trade that was affected by U.S. tariffs on China, there were only about 1% of that $50 billion in China trade consisted of consumer goods. When you look at the second tranche of $200 billion in goods, nearly 27% or so was consumer goods. If you look at the third tranche that President Trump has mused about, it's almost a third. So we don't see him going through with those tariffs.
Well, we're just about out of time, so I'm going to have to leave it there. But I thank you.